In this video, traders, I'm going to talk about the benefits of splitting your trading strategies into segments. Stay tuned. Hey guys, warm welcome to you. All right, so we're probably familiar with the concept of kind of having individual strategies for different markets and different time frames. Familiar with it? We separate things: momentum ignition, price exhaustion, and then within that we've got the rules around each setup. Fine, makes perfect sense. Now, there's one more kind of bracket or bucket or segment, which I like to call it, which actually is a good way of really making life easy for yourself. So let me explain. So I'll explain from my perspective. So I have two segments. Forget about swing trading now. From a day trading perspective, two segments. So one segment is a scalping segment and one segment is daily swings. So daily swings is looking for trying to lower the day back to a mean, high the day back to a mean, maybe an extension for continuation up to a level I've defined, maybe a double bottom up to a broader play that's going to play out and maybe give you 2 or 3 trades a day, maybe more on a big day, but looking for those bigger swings, those high to low, the low to highs, timing it in the day, all this kind of stuff. That's fine. But in the other segment, I have scalping. So scalping, which I try to do as little of as I can because I want to get away from that, but it's still something I'm good at. It's still something I'm good at reading the short-term moves on. So whilst it's there, it makes sense to utilize it when I see an opportunity. And I'm not going to be sitting there all day long in front of the screen looking for it, but if I happen to be looking for it, waiting to stalk potentially a broader opportunity at a broader level, then fine. But anyway, the point is these two different segments. So this segment, the scalping, for argument's sake, got a 10-point stop, 10 to 20 points target. Fine. The other bucket, the other segment, might have a 30, 40 point stop with more like a 90 point target, something like that. And so the advantage with separating these two into different segments, and you might have multiple segments here, because I've got some swing trading as well, but just from a day trading perspective, is that number one, it's easier to make things more sensibly labeled. So if I have a structured play, for example, I'm looking for double bottom at a level back to the open, then I'm going to have a level that I'm interested in. I'm going to have a target. It's going to be much more framed structurally, and it's going to have to be very important to see the level I want, the price I want, the filter I want, the trigger I want, because I'm risking more. I'm looking for a bigger move, and there's a lot more at play with that. The scalping strategy is very much, it doesn't really matter so much what the level is, it doesn't matter so much where we are. It's literally looking for short-term momentum that you think has just gone too far to ping back or just about to get going, that's got another little leg. Why? Which is why the targets are more like 10 points or 20 points, depending on how volatile the market is. So there's a different rule for that, and it's a really fixed target of 10 points or less, stop of 10 points or less, purely because it's a momentum scalp or it's a reversal kind of stretch scalp, but it's a scalp only. And so I never ever have to beat myself up that I didn't hold for a longer target. That's why it makes sense to put it in that segment. If it was in the just everything trading, I'd be like, why didn't I hold it for the full target? Well, I didn't, because it wasn't a proper setup for me. It was a scalp play, and it's there to snatch a quick 10 ticks out of the market. That's the name of the game. And if it doesn't work, you're out, you lose 10 ticks. And I might take a couple of those in a day if there's opportunity there. And so having those and saying, listen, the rules for those are different. They're a little bit more flexible in terms of position in the price, but they're a little bit more strict in terms of what I want to actually see on a very short-term basis. The other broader trades that are looking for a longer move, bigger move, still intraday, are much more strict on structure in terms of where we are, how far are we away from the open, what type of day we are, what's the daily support resistance looking like, where would my stop be, what's the risk reward ratio on the trade, all this kind of stuff far more important, but far less important, what's a very, very short-term price action. Still take it into consideration for kind of fine-tune that entry, and that's the perfect sweet spot when you get the kind of skills from the scalping with the broader term play. But what it does is it helps me, in my mind, not be annoyed if I didn't hold a trade longer. Well, it's a scalp trade. You did the job of a scalper. and really distinguish and separate some of the things that are important. Yes, there's some synergy there, but there's some separation. So something maybe for you to look at is to say, okay, I have a couple of trades, and yes, they're different strategies, and of course label your strategies so that you know, hey, that was a bull flag, that was a momentum ignition trade, whatever it is, so you have a log of what strategy is what and how it's performed. But also within those, different segments, to say, hey, the structure of this trade is slightly different. What I'm looking for is slightly different. The rules are slightly different. The rules of engagement have changed, and I know that. And so I can be more focused on this and more focused on that. And obviously you can have one segment that's have a priority more than others, and that's probably going to be your broader trades. There's the ones that make you the money, there's the ones that do well. The scalping ones, you're going to make a little bit, but it keeps you in tune with the market, gets you in feel with stuff. Now, obviously, if these things are off-putting for you and you want to focus on one thing, definitely, I'm a fan, guys, of bringing in that focus onto one thing. That's fine. But the point is, if you do have other things that are really slightly different trades and setups, consider segmenting them off, consider having your different rules for them, and consider looking at them completely separately. Because that way you forgive yourself a little bit for stuff that you don't hold and don't run. You forgive yourself for maybe getting stopped out just as it's turning. You kind of look at things very, very differently, and it's much easier in your mind to approach trading with much more clarity, much more focus, much more kind of reason to do something, which is what we all need as well in our trading. All right, guys, whatever you're doing, whether you're scalping, whether you're day trading, whether you're swing trading, you got to keep your risk managed. Take care. Bye-bye.